I don't have fancy slides for you, but I'm just going to share this Google Sheet with you guys. We were so busy collecting data and stuff that I didn't get time to prepare fancy slides, but it's okay. The information is still going to come across. All right, so let's do a quick recap here. So, a little over a year ago, we came out with actually right around a year ago, maybe 10 months ago, we came out with the HedgeBot product. And prior to HedgeBot, prop farming was still good, but it was difficult psychologically because we would pay $400, $500 for challenge fees. And then if we lost, we were out all of the challenge fees. And so when we came out with the HedgeBot, this was a huge, huge game changer because, as you know, with the HedgeBot, it gives you the opportunity to recover some or sometimes all of your challenge fees. So even when you lose, well, you either don't lose money or you lose a lot less money than you would. And so the way we viewed the HedgeBot is like this massive discount. Hey, if we could get a 50% discount on our challenges, would we take it? Yes. If we get 60 or 70% discount on our challenges, would we take it? Absolutely, all day long. And so the HedgeBot was a huge game changer in this way. Now, we learned as we started actually testing the HedgeBot, we learned that it doesn't always recover 100% of the challenge fee. And so we're thought like, why is this happening? And we noticed these things called discrepancies that happen where, hey, maybe you lost 100% of your prop account, but you only recovered 60% or 50% or 30% of the challenge fee. So this is a discrepancy amongst what you set your recovery amount goal to be and what you actually end up recovering. And we also noticed that some of the times there was outliers where, weirdly enough, you could actually fail the prop firm challenge and you could actually lose money on your live hedged account, which was a brain scratcher for us. And so we went down this long journey to figure out why the heck do discrepancies and outliers happen? Why can't we recover 100% of the time? And the answer is because of fees, okay? Anytime you're trading, the house is always going to have an edge, the broker that you're trading with, which we'll refer to as the house, they're going to have an edge. And the way that they make money is through their fees. And so brokers make money a few different ways, okay? Number one, they make money through commissions, which is basically a fee charged on every trade placed. Generally is going to be around $7 per lot. So if you take a 2-lot trade, you're going to pay about $14 in commissions, right? Now, it varies broker to broker, but that's kind of a fair thing to say. So obviously you can see if you take a lot of trades, well, now you're stacking in a lot of these fees, which you're not able to recover, right? The second thing is spreads. So this is the second way brokers make money. It's called spreads. And spread is the difference between the bid and the ask price. Basically, what you can buy and sell an asset for. The analogy I always make is if you take your dollars and you go down to Mexico and you want to exchange them for pesos, maybe you get an exchange rate of every dollar's worth 20 pesos, okay? Now you're leaving Mexico, going back to America, and you want to sell those pesos that you have. Now you can only sell them for $19. And so there's this $1 difference between what you can buy and sell them for. And this is called the spread. And this is how brokers also make money. And then the last way that brokers make money is through something called swaps or swap fees. And this is basically when you hold trades over the daily changeover period, you incur what's called a swap fee, okay? So this is the reason why discrepancies and outliers happen, is because of broker fees. And unfortunately, if you're trading, there's no way to get around broker fees. So is everyone clear on why discrepancies and outliers happen? 111 in the chat box. This may be review if you were on our last webinar. 111 if you get this. Okay, so it's unrealistic to ever be able to recover 100% of your desired recovery amount because of this inherent edge that the broker has called fees. Okay, so that's what we learned. And so obviously we should be working to cut down fees as much as humanly possible, right? So here's what it led us down. we really wanted to get scientific because we had a lot of hypotheses about what we could do to decrease fees and improve our average recovery rate. So what we did is we actually built this tool called the HedgeBot testing tool, or the HBTT for short, which is this whole additional piece of software that we had to build and code for our business, to see, hey, how do our different hypotheses actually impact average recovery rate? And so the cool thing about the HBTT is it allowed us to basically test about 1,000 challenges in the matter of like 3 hours. Okay. And so now we've been able to gather results on, like, we estimate around like 100,000 different full completed challenge simulations, which obviously if you did this in the live market, it would take you, 20 years if you're doing like 100 challenges a week or something crazy like that. Right. So again, my math's off there, but you get the idea. It'd taken an extremely long period of time. So we built this HBTT, was a huge undergoing, but it's the coolest thing that, we can do to test our different results. So what have we confirmed? So what are the results of these 100,000 simulations? Okay. We have some things that we've confirmed that for sure improve recovery rate. And we have some things that are still in testing that we think could further improve recovery rate. Okay. So the few things that we've learned, number one is we've actually learned that using static features works better than using dynamic features. And I know you guys are going to be like, especially you guys that were on our last webinar where we said dynamic features were better. We actually found out that dynamic features are not better. And this is maybe a little bit confusing to you, but we built dynamic features to help overcompensate fees. That was the whole reason we built dynamic features, was to overcome some of the potential fees. And what we found out is it's actually a trade-off. And from our testing so far, it hasn't been proven to be a beneficial trade-off. And so the long story short, guys, if you take one thing from this webinar, if you just turn off the dynamic features right now and you just use the static features, over the long run, you're going to be better off. I know, really, really simple. Joe, you had something you're going to say?
Yeah, I was just going to add and say, it's not that dynamic features don't have a positive, edge. Dynamic features are still good and they still work and there's still data to back that up, but it's just that static is slightly better and easier to work with. And yeah, like the other thing too is the whole point of the HedgeBot is to make our trading psychologically easier. Imagine you go on this losing streak and you're having to fork out challenge fees because you're not hedging. That can be really psychologically difficult after a certain period of time. And you're going to give up on a system that could have made you money had you been able to stick around for the winning streak, right? And so that's the other benefit of static. It's not just that it's slightly better than dynamic, but it's also that it's psychologically easier because you're not going to have these big swings in your, your hedge account, like you can see with dynamic features, and some of you can relate to, I know. And so that's a huge benefit as well, because if hedging is making it psychologically more difficult, then we're kind of missing the point of hedging, right? So that's the other thing I love about static as well. And just seeing this data, I've actually been really happy that we've been able to confirm that static is better than dynamic because, I think it's just a lot easier to trade as well.
100%. So first things first, all clear, 777's in the chat box. If you guys are with us so far, if that makes sense so far. Okay, cool. Thank you for the participation. This is just me asking to make sure that we're clear, and also you guys will retain the information better. So that's why I always ask. Okay, so next thing that we know for a fact, if you trade less average lots, it's better than trading more average lots. Well, why is that? Because lots are a direct the higher the lots, the higher the fees. The more the fees, the more the discrepancy, the more the house edge, the less your edge. So we want to trade with as low of average lots as possible. Now, a lot of you may have noticed that on the leaderboard, we've actually started sorting things by average volume, which is the average lot. So you can see, for example, here, the average lots taken to pass or fail a challenge is about 23 lots, okay? Which is good in comparison to 83 lots. If you trade and you have 83 lots that you need to trade in order to pass or fail a challenge, then you're going to incur significantly more fees than if you only need to trade 23 lots in order to pass or fail the challenge. And so, of course, it makes sense to use low average lots. Well, what leads to low average lots? And when we talk about low average lots, we ideally want to see something less than 30. Now, quick caveat on this, just because this strategy shows that it has low lots on average, remember, this is an average. This also means that some of the time it can be a lot more than 30. Like, for example, here it was 40 lots. Or if I keep scrolling, I'm sure I'm going to see something even more than 40 lots. Here was 78 lots. So just because you choose a low lot strategy on average doesn't necessarily mean that this instance it's actually going to have low lots. It could have 78 lots or it could have 6.5 lots. Okay, this is the way that averages work. 111 in the chat box if you guys are clear on this. But on average, it makes sense to trade a strategy that has less lots on average. Now, how do we do that? Okay, let's think of a hypothetical example, right? How could you trade the lowest number of lots possible? Well, the way that you could trade the lowest number of lots possible, let's say, for example, on this challenge, you need to make a 10% profit target and you can't lose more than 10%. Well, to get the lowest lots possible, you'd want to trade the smallest lot possible and you'd want to make 10% or lose 10%, right? This is definitely going to give you the lowest fees possible, right? If we take a 0.5 lot and we let it go 10% profit or 10% stop loss, then we're only going to, trade 0.5 lots, which is the ideal situation. Now, this is going to take you forever to pass the challenge, obviously, and is not ideal. So what we found is kind of the ideal. We want to use the max risk per trade within the prop firm soft limits, right? If a prop firm just sees that you're going for 10% profit target in one trade, they may consider that as gambling or one-sided betting is what they'll call it. So for the soft limits with the prop firms, what we've kind of seen is like the max you should risk in a trade is like 2%, and the max you should gain in a trade is about 4%. Okay. And by using the max risk per trade within the soft limits, this should also allow you to trade less lots on average. Okay. But again, the main thing is if you're just coming to the leaderboard, you can just choose strategies that have low average lots. Should kind of accomplish the same thing. Everyone with me so far? 333 in the chat box if this makes sense on why you should use low average lots. All right, good. Okay, last thing that we know makes a difference is the spread filter. So the way that the spread filter works, right? Again, spread, difference between bid and ask, what you can buy and sell an asset for. Larger the spread, the worse. We've built a feature called the spread filter in Titan X, which essentially the way that it works, if you set it to say 100, anytime the current spread is below 100, it'll enter the trade. Now, obviously, this is a large fee that the broker is going to make versus if you just do a 20 spread filter, for example, then the bot, anytime it's above 20, it's not going to trade, and it's only going to trade when the spread is below 20. Okay. So does that make sense? 111 in the chat box, why it makes sense to trade when there's less spread versus more spread? 111 in the chat box, does that make sense? All right, cool. So all of this is pretty much centered around trading low lots or low volume. And we showed this spreadsheet here last time, but this kind of can just confirm if we look at this, chart here, we can see recovery percentage on the y-axis, and we can see the total lots traded on the x-axis. And you can see there's some correlation. Okay, when we trade less lots, we have higher recovery. When we trade more lots, we have more variance and on average, less recovery. Okay, so that's what we know so far. We know that trading when there's less spreads, we know that trading less lots on average and trading static, we know that you're going to be better off. Okay, that's what we can confirm. So now we'll move into some of the things that we're testing that can potentially increase the average recovery rate even further. And then we'll show you the results. Okay. So a few things that we're currently testing. One is a concept called copy stop levels. And basically, the way that the HedgeBot works now is anytime Titan X enters a trade, HedgeBot enters a trade. And anytime Titan X closes a trade, HedgeBot closes the trade. Okay. And this is how it works now. We're testing an idea called copy stop levels, which basically says that, okay, Titan X enter a trade and set the take profit to say, for example, 200 pips. Okay. Let's use 100 pips for easy numbers. 100 pips is your take profit. Okay. Then what it'll do is HedgeBot will also enter a trade at the same time, but it will also go for 100 pips, right? So the idea here is that they're not just closing at the same time, because there could be differences in the price feeds in the brokers that you're trading, which could lead to discrepancies. But it's actually going for the exact amount of pips traveled in order to hit the target. Okay. I know this is a little bit more advanced, but that's essentially what they're doing. Now, there's obviously a trade-off with that. One is it should mitigate price feed differences, which can lead to a discrepancy. But the second thing is there could be these things called rogue trades, which basically means, for example, it could hit the take profit on your prop account, and it could fail to hit the stop loss, for example, on your HedgeBot account. And so you have this rogue trade that's kind of just floating around, which could work into your favor or work against you. So that's what we're testing. The second thing that we're testing is having a hard equity protector, essentially, to cut your HedgeBot losses at a total of, for example, negative 150%, meaning that you can't lose more than 150% on your HedgeBot, which may also be a trade-off, but it also may improve the result of the HedgeBot on average. And then the last thing that we're testing is to close all of the trades at the end of the day before the daily changeover. And our hypothesis is that this will help avoid swap fees because you're not carrying trades overnight, is the hypothesis there. The other thing that we're testing is pausing any new starting trades earlier in the day. So it gives it a chance for this trade to close out on its own and hit the full take profit or stop loss. Okay, so this is also what we're testing. We're hopeful about some of these. So we think that the results that we're going to show you now could be improved, but we want to give you kind of like a baseline. Okay, so all clear, you guys ready to look into results? 777 in the chat box if you're clear and you're ready to get into results. Okay. So to set the stage here, with the current default settings of the HedgeBot, we're actually seeing that the average recovery was actually only between like 50 and 58% is kind of what we're seeing. So we could say about 55%. Now, is this good? Well, if you think about it like this, if you guys could get a 55% discount on your challenge, would you take it? Probably, right? If you could get, all you could do is a 55% discount on the challenge, would you take it? Probably, right? Every day of the week you would take that, right? And that's how we saw it too when we first came out with HedgeBot. Of course you'd take it. So that's kind of where we see the baseline of where we have been in terms of recovery rate, which some of you guys may be like, oh, well, that's not that good. And I also agree there's room for improvement there. So let me show you what we've been doing. So what you see here is a spreadsheet of the HBTT, or the HedgeBot testing tool results. Okay. And a few things that we can see here are, the number of trades taken, the total lots taken, you can see the dates. But here you can see the prop P&L, the prop P&L percentage. So basically, if it's negative 100%, obviously you failed the challenge. If it's positive 100%, obviously you passed the challenge. And then I can see the hedge P&L, which is what percentage of the recovery amount did the HedgeBot make. And then most importantly here, I can see what we failed and what were the RR stands for recovery rate. So the recovery rate when we failed and the recovery rate when we passed. Okay. And we'll get into the individual result, but you can see here that when we failed, on average, we recovered 73%. Okay. So this is a big lift. This is like 40 to 50% improvement from the current default settings of the HedgeBot right now. Okay. So a massive improvement, as you guys can see. Now, question, if you guys could get a 73% discount on your challenge fees, would you take it? 111 in the chat box if you guys would take 73% discount on your challenge fees. Right? You take it all day long, right? Okay. Now we also see our average recovery rate when we passed. When we passed the challenge, on average, it's showing that we should lose 111%, basically. So if we have a $500 recovery amount, then that means on average, we should, if we fail, we should recover times 0.73. We should recover $365. Okay. That's basically like your challenge fee costing you $135 is all for 100K challenge. You guys, if there's a prop firm that gave you $135 challenge fee for 100Ks, like you guys would be freaking out. You wouldn't even think it was real, right? And it basically says that when we pass the prop firm challenge, we're going to essentially lose $555. Okay, that's all it means. Okay.
Adam, there's an important point to make with that too, I think, with the average pass rate. The average recovery rate when we pass, so being minus 111. When we pass, a phase one, for example, and we lose that, what we do is we take that $555 and we add it to our recovery amount in the next phase. And that's because if and when we fail the next phase or get to our first payout, we're able to make back those losses. And that's why hedging makes sense. That's why we don't have to, that's why we can lose more than we make back when we pass, for example, with hedging. So just want to make sure that's clear. When we pass and we lose money, that's part of the hedging process. I guess we're not going to get into that, in this video. And so, but assuming that you understand how hedging works, we have another, video that goes over that and the math behind it and everything. But yeah, I mean, I think that's important to understand too. Like, we're not as concerned with the recovery rate when we pass. We're more concerned with the recovery rate when we fail, because ultimately that's where we're making our money back and, getting that discount, like Adam said.
Perfect. So with that being said, let's talk about this, for example, okay? Because hedging is not perfect. As a lot of you guys know, nothing in trading is perfect, okay? And when you're doing this hedging process, you can definitely lose money in the short term, okay? So let me just go through some of these examples here with you. So for example, here's a scenario where you actually failed the prop firm challenge, but you recovered 106%. Okay, fantastic. Here you failed another challenge and you only recovered 66%. Okay, not great. Here you failed, you recovered 95%. Here you failed, you made 90%. Here you failed, you recovered 90%. Here you failed, you recovered only 52%. Trying to look for a really... Here you failed and you lost 39%. What the heck? You failed the challenge, so you lost, your $500 challenge fee, and you lost money on your hedge account. What the heck? Okay. This is possible. Okay. Here's another example where you failed the challenge and you only recovered 1%. You may think, what the heck? Like, hedging sucks. This bot sucks. This thing is crap. There's a bug in it. It's broken. All this stuff. Here's another example. You failed and you only recovered 26%. Another scenario. But again, if you look at that, there's all of these incredible results where you're doing really, really well, but it doesn't mean that you can't lose money hedging. Okay. And if you let your short-term variance, like, okay, crap, I only recovered 29%. In this next one, I lost 39%. What the heck? Then you're going to lose out over the long term. So you have to let the edge play out long term. And I'm very confident in this because we've ran like 100,000 simulations. Okay. So it's pretty good. Now, when you pass, same thing. What do you expect? There's sometimes when you pass, wow, I only lost 94%. But also sometimes when you pass, holy crap, I lost 161%. That is in the realm of possibility. Holy crap, I lost 172%. Okay. When you pass the challenge, I lost 181%. Okay. So again, it's important to not let a one-off result or two results persuade you from not acting on an edge that's proven. Okay. Because you can see the average recovery rate when you pass is negative 111.
And again, we're not as concerned about that because you make that money back on the next failed phase or payout. So, yeah.
Yep. So, now I want to show you guys a real world example. Okay. So this is my personal results, which I'm going to open up the book and just show you guys my real results here in a second. But I looked at my 30 last failed challenges. Okay. And, my average fee, let's say, was $450, which was pretty close to what it was. I think it was $440. This sort of, let's do the real numbers here. So I think my average challenge fee was $440. So my last 30 times 440 is $13,200. So this was my real cost on these failed challenges. Had I not been hedging, I would have lost $13,200. Okay. With hedging, real results, real world results, it actually only cost me $2,400. Okay. So while it wasn't perfect, I still cut my costs down, I mean, dramatically. Okay.
And Adam, I bet, over the course of those 30 failed challenges, you lost $13,000. You probably would have given up. I feel like any person probably would have. And just said, look, this just doesn't work. I'm losing $13,000 on this. This is way too expensive. I can't keep doing this. But thanks to hedging, you only lost $2,400. And for the scale at what you were doing things, that really wasn't that much in relatively speaking. And so that gave you the ability to continue. And then we're about to see your results and see how that paid off for you. But yeah, I just love this example because again, it's that psychology piece where hedging can help a lot and can help you stick to a system that's profitable. I don't want to be compliant in my wording, so it can be profitable, right? But it has a positive expected value. Whereas otherwise you might have given up on it and you wouldn't be around, you wouldn't have been able to stick around for the good times, so to speak, or the times where you're, making all that money.
Yeah. And just to put this into perspective, $2,400 is what I lost divided by 30 times that I took it. It's really like $80 per challenge is what I paid. or 100K challenge, which is pretty cool to see. Okay. So all of this, I'm just trying to set your guys' expectations correctly of what you can expect. It is possible to lose money. It is not always going to recover 100%. And you can have outliers that happen where you lose money on your hedge bot as well. Okay. All of the 100,000, by the way, these are all just regular hedging. We're not even factoring in over hedging at this point. Okay. So just so you know. Okay. So let's get into this. Let me show you guys. I'm sure there's some of you guys on this call that maybe you haven't had as good a result as you've hoped to. And you're thinking, hey, does this system actually work? Or are these guys just, marketers and salespeople that are selling me a bunch of whatever, And here I'm going to prove to you, does this system actually make money? And you guys can be the judge of it. Okay. So let's take a look at this. So what I'm going to show you is something called our EV calculator or expected value calculator. So first, let's start off by defining cyber snake oil, right? Is this cyber snake oil? Exactly. So let's define this. What is EV or expected value? What that means is it means what is the average expected value per action taken? Okay. And you can use this if you're, playing a video game. You can use this if you're playing poker. You can use this if you're evaluating trading systems. This is a statistical term. Okay. And what it means is what are we expected to make basically per action taken, or what are we expected to lose per action taken? Okay. Anything positive EV is good and you should do. Okay. Anything that is negative EV, you should not do. This is going to lose you money over the long term. Okay. So for example, playing blackjack at a casino where the house has an edge is negative EV on the long term. It's something you should not do if you're looking to actually make money. Okay. So in this case, expected value, we're going to define as how much money should we make or lose on average when we take a prop firm challenge, not whether we pass or fail, but on average, every time we take a prop firm challenge, how much should we make or lose? Is everyone clear on what expected value is in this case? 111 in the chat box if you guys are clear on what this is. Okay, good. All right. So this is just a nice fancy calculator that Joe put together where we can put in stuff like our challenge cost, the challenge amount, sorry, I'm going to do the two-phase first. So our challenge cost, the challenge size, our profit targets, our max loss, and our phase 2 profit target, for example, and our profit split. Okay, so I'm just going to put that in there. Okay, so now we can go ahead and we can put in what our average recovery rate is when we fail, which again, we said was, 73%. And when we pass, negative 111. So we'll be a little bit conservative here, guys, just to, be on the safe side. 70% and 115. Okay. Now, what we're going to do here is we're going to play the worst case scenario game. Okay. So let's say, God forbid, somehow you really muck this up bad and your funded rate is only 15%. Okay. You really you're doing something wrong. 15%. And the second thing is we'll say that the percentage of the time that you reach your first payout is only 6.75%. Okay. Again, you've really just blown it here. You've done something horrible. And the average value of your funded account is only $2,600, which again, something you've just done completely wrong. Even at this, okay, every time you start a new prop firm challenge, you should make $178 in profit on average. Okay. Which is incredible. Okay. Even if you totally muck this thing up, every time you guys are, starting a new prop firm challenge, you're making $178 here. Now, disclaimer, right? This is a hypothetical example based on statistics, right? And I am not guaranteeing you profits right here, but I'm just saying in this statistical model, with the given parameters, which we've gotten from real world results and real world tests, this is what it should be. Okay. I just want to be clear here, making sure you guys know that I'm not promising profits here. Okay.
Adam, I also just want to say too, this is under the worst assumptions, just like you said. So um, we came across a video recently where this guy who oversees hundreds of prop firms, he was giving statistics out on what is the average funded rate, what's the average payout rate. And so you can see here the funded rate we've set to 15%. That's pretty much what he said in his video. I think he might have said 14%, but pretty close. And then also the actual hit rate being 7%. Adam's going to show you his real results. We're actually much higher than this, but again, we want to make kind of the worst assumptions here. And we can see even under those worst assumptions, we still have a positive expected value, so to speak.
Yeah. How many of you guys think that that's cool? That like, hey, you know what? I just know just for setting this thing up, like I should make $178 from this, regardless of whatever happens. One-on-one in the chat box, if you think that like that's actually kind of cool. It's like, wow, okay, well, let's just set it up. Every time I do that, I'm making $178.
Want to make more money and take more challenges. It's that simple.
That's pretty cool, right? So now let's go ahead and let me show you guys my actual results. Okay. So here I've taken 54 plus 25. So I've taken a total of 79 challenges. Okay. These are my 2-phase challenges. This is my 1-phase challenge. Okay. So we'll start here. My 2-phase challenge funded rate is 21% currently. Now, I expect this to be probably about 25%. I did go on a pretty nasty losing streak when I was using those 2% strategies with the 2-phase challenge, which is absolutely not the way to go, but that's what I was doing. So I'm at 21%. If you're, starting new, I would think that your success rate is going to be higher. If you're going for like a 2% stop loss and a 4% profit target, you should be higher than this, but this is what I'm at, just so I can be real transparent with you guys. Okay. So there you go. 21%. Now here I can see my total net profit. So this is kind of like the main thing that you want to see. So in this time period, I made $53,000 in payouts, which is pretty cool. Now, the first 3 months that I was prop farming, I was working on getting my first funded accounts and also getting my first payout. So for like the first 3 months, I didn't really start to make any money until like 3 months into it, basically. And now I'm averaging close to around like $10,000 per month or so. Okay. Now, with that being said, a couple important things that I want to point out here. I can see that I've saved a total of $22,000 in challenge fees from hedging. So that is something that is really cool to see that, hey, just by using this product, you could save a significant amount of money. I can see my current lifetime funding is I got funded $1.3 million. I currently have $500,000 worth of funding, and I have 5 accounts that are in phase 2. So I think that I'll probably be around 800,000 again here very shortly. But that's where I'm at right now. Now, my minimum average value of a funded account. So this is, again, my real data. The lowest that the average value of my funded account is $4,838. That means that every funded account that I get, on average, I should profit $4,838. Okay. So here's
at least, right? Because that's the minimum average. So it's at least, because you still have $500,000 in funding that's going to yield something, and that's just going to increase that number. So far your average value is 4,800, but it's probably in reality higher than that. Right.
So everyone clear on that? I'm trying to just give like worst case conservative example here.
And Adam, also, I don't know if you mentioned this or not, but this, since you started keeping track on spreadsheets and really like looking granularly at your data, this is, I think, 9 months, right?
Yes.
Tracking on this. Okay.
Yeah. Yeah. Just about. A little bit less, I think, but almost.
Okay.
Okay, so there we are. Moving on. Okay, so here's my real numbers, and here is the EV calculator that we're just talking about. Okay, so if I'm to put in my real numbers, okay, I'll just show you. 35% phase one pass rate, 60% phase two pass rate. So let's just put that in here. 35%, 60%. And the average value of my funded account was $4,800. So I need to bring this up to about $4,800.
At least 4,800, right?
At least 4,800. So
by the way, the reason why we did the worst assumption before this is just because we want to make sure that it works even in the worst case scenario. Because if it does, then we can feel pretty confident that we have a positive edge with this. So now this is the real numbers. Yeah.
Okay. So now at this point, my real numbers, and this was a real confidence booster to me to like really scale this thing. But I know my EV is on average, every time I start a new challenge, I'm making $500 profit. This has been my historical results. And of course, past results don't equal future results, but you get what I'm saying, right? How many of you guys think this is pretty good? 777. How many of you guys would just like, hey, if you got paid $500 every time you started a challenge, you say, hey, that's pretty good. Pretty dang good, right? Like this is really good. And again, this is just where we're at right now. And again, I put conservative values here. I tried to be really conservative in this. We think that we can even improve this result. We're pretty optimistic that we can improve that as well. So this number should just get better. Okay.
Adam, could I also just add to this too and just say a couple things?
Yeah.
So, number one, like the recovery rate that we showed, that 70%, that's not factoring in the fact that on phase two and funded, it's going to be higher. That's only the phase one recovery rate. And so let's say you pass phase one and, you lose money due to hedging. Well, you're actually going to have a higher chance of making back more of that on the next phase two, if you fail or whatever. So the point being, phase two and funded can actually recover more accurately because you have smaller profit targets and therefore you're trading less lots. I also know, Adam, in your data that you just shared, in fact, even if you want to go to it, you told me a couple times when you were sharing your results, you're like, Joe, these ones here, I completely screwed up. It's my bad. But you still wrote it down. I mean, you still logged it, of course, but I know there was some significant user error on some of those results as well.
Yeah, this is including some user error. So I'm just like, this is just real raw.
Yep. And then I also know that when you were calculating your hedging results with this, you calculated your average recovery rate of being around 60%, which is pretty in line with what we were saying earlier, like that we're getting now with the dynamic features and whatnot. So again, that should also, improve these results significantly. And also, last thing, you're not using any low lot strategies with this. I mean, this was, like you said, you were using a lot of 2%, 2%. So again, your hedging results could have been a lot better had you been applying what we're talking about now. So this is at least I think this is pretty cool to see, that even not trading ideally, messing things up, not choosing the right strategies, using the wrong hedge settings. I mean, all of that, you're still, $53,000 profitable after 9 months.
Yeah. So again, that should hopefully be encouraging, because I hope you guys, with the discoveries that we've made, everyone's results should be better. The other thing that can lead to a better result is that, we're assuming a 10% challenge. If you only need to make 8% profit target, then of course your results and the EV of this whole system is going to get better as well. So again, we're trying to be conservative. Hopefully you guys see that, but like just as a baseline, here's where we can be. Now let's take a look at the one phase challenges and then we'll get into Q&A. Okay. So here's the one phase challenge with E8 Pro, $400 test fee. Recovery rate is going to be a little bit lower because you're going to trade more lots on average, because there's going to be that back and forth nature, because you can only make 2% or lose 2%. So recovery rate we've seen is going to be a little bit lower. But let's just say, for example, your funded rate on the one phase challenges is 25%. The EV should be around $551. Okay. And if we put in my real results, I'll just do that real quick. 32%. So 32%. The EV per challenge started is like 635. And this is, I mean, this is being really, I mean, again, my average value of a funded account is 4,800. So if you guys want to see that, I mean, that's pretty close. So yeah, around like $1,000 per challenge started. So the one phase challenges, yes, they're going to have a lot higher EV. So I think that it's a good idea to max out those ones, because, you know, it should be higher expected value. Which this is, I mean, this is pretty freaking awesome, if you ask me. Cool. Anything you want to comment on there, Joe?
No, I think I've said most of what I wanted to say. But yeah, this is, I mean, I think that the key takeaway here is, you know, hedging, just yeah, the expectations. You know, hedging isn't perfect. And yeah, all these numbers look good on paper, but it's a process, you know? So you have to be willing, like if you want this 70% discount that we're talking about here by, you know, applying these things, you have to be willing to accept there's going to be inconsistency. And you have to be willing to say, yeah, if I only recover 50%, or if I actually have an outlier where I lose the challenge and I lose money, you have to be willing to then put your money down and do it again and let the averages play out over the long term. Because we know, as we showed, if you're willing to do that, then, you know, it's definitely more than worth it. And you're just going to save a lot of money on challenge fees, and it works. It makes sense, right? Even under the worst assumptions, like we showed as well. So I think that's the thing is, you know, hedging isn't perfect. You can even lose money hedging sometimes. But over the long term, it's going to save you a lot more money on challenge fees, and is going to help you make, you know, more money in the end.
All right, so what we're going to do is we're going to open it up into Q&A. But before I do that, a quick little promo. We're actually sending one customer and their spouse to an entirely free vacation to Cancun, Mexico. I don't know if you guys have seen this, but basically we're paying for everything. We're paying for you and your spouse's flight. We're setting you up at a 5-star luxury resort hotel that's all inclusive, all you can eat, all you can drink. Both me and Tyler have been there. It's one of the nicest resorts that I've ever been to personally. I think it is the nicest resort I've ever been to personally. And it's incredible. And you basically have until tomorrow, but basically all we're doing is we're doing a contest here. So if you leave us a video testimonial, basically the instructions are right here. You just whip out your phone and you answer 3 questions. It's super easy. Then you'll get entered to win. The best testimonial wins. And you know, you're going to get, it's an amazing vacation. Like they have these adventure parks. You can go in underground cenotes. You can go zip lining. You can go on catamaran. Like, I mean, the food is 5-star. The rooms, the resort is just incredible. Like all of that. So if you guys want this, it's completely free. Okay. And there's only been like 12 people that have submitted so far. So unlike a lot of other online contests where there's like thousands of people entering, there's only been 12 people. So there's only 12, which is incredible. So you have a really high chance at winning still. But this, the last day to submit your video testimonial is tomorrow. So if you are interested, go to www.propfarming.com/Cancun. I'll write it here in the chat box, but that is, we'd love to hear from you guys. And, you know, you actually have a high chance of winning. So, I recommend, giving this a go. So yeah, now we'll get into Q&A. So I'll stop sharing my screen and let's do it. So questions, let's do this. Where are we at? All right. Daniel says, why is the account blow up rate so high? How to reduce that? It's not that high. I mean, a 2% target, I'm hitting 75% of the time. So yes, I blow up accounts, but doesn't matter. So I don't, if you
Also,
go for $500 profit, of course, you're going to have less blowups, but it's just, that's going to take you a lot of time to make the same amount of money. So all that data with HedgeBot 1.34, this has been with HedgeBot 2.0.
but you can apply what we talked about with 1.34 by simply turning off the dynamic features. So that's when we're talking about static being, a better option. That you just simply turn off the dynamic features on 1.34 and that's the setting. We are going to come out with a new version of the HedgeBot that potentially does the copy stop levels thing that we're talking about that could improve these results even further. But at the current moment, you can apply everything we talked about and recommended in this video by simply turning off dynamic features. Thomas de Jagger said, I am talking from experience. Static hedging works perfect. Just make sure the strategy has low average volume. Exactly. That's a perfect summary of what we were talking about today. Choose a low average volume strategy.
You could have just skipped the whole webinar, read this message, and you're good.
Yep. Yep. Choose a low average volume strategy off the leaderboard and turn off dynamic features. There you go.
Yeah. So the EV calculator rod, this was using overhedging. See how we did that there? So the EV calculator was with overhedging. Oh, sorry. Well, you saw the EV calculator.
How much money do you guys have on your hedge account relative to the challenge fee? Adam, correct me if you do this differently, but I always do 1.2 times the recovery amount.
For the amount of money in my hedge bot account?
Yeah. How much money do you guys usually have in your hedge account relative to the challenge fee? So yeah, I mean, phase one, your recovery amount is going to be equal to the challenge fee usually, unless you're overhedging. But it's the amount of money that goes in your hedge account is relative to the recovery amount, and it's 1.2 times.
Why is the funded rate different from percentage of time to reach first challenge? Don't understand that question. If the challenge fails more often than passes, can't we just use the challenge bot on the real account and the hedge bot on the challenge account? It's not so simple that you're not taking into account that there's like a two-phase challenge. Joe, how do you explain this to Leo?
I don't really understand what he's saying, to be honest.
If the challenge fails more than the passes, can't we just use the challenge bot?
So Titan on the real account? Why would you do that? And HedgeBot on the challenge account?
I don't know why.
I don't get it.
How much are you typically over hedging per challenge? I usually do double. So like if the challenge costs me $400, I'll generally do like 800. Sometimes I'll do 1,000. Like on the one phases, I'll set it to like 1,000. Just because it's one phase, so it's a lot less capital intensive.
Maybe what Leo was talking about was simply like reversing the the challenge strategy. And we do have a feature on Titan that would allow you to do that. So basically, it's just instead of taking where it would normally take buys, it takes a sell. But it's crazy, with commissions and spreads and broker fees and everything, it's just as hard to make a losing strategy as it is to make a winning strategy. Um, and it doesn't work where you can just flip it. It sounds like it should, but it doesn't, because of those fees. And I feel like something else that I'm forgetting off the top of my head. But yeah, we've tried that. We've looked into it, and the bottom line is we can't control our pass rate. Um, and also, when we're choosing strategies on the leaderboard, we're not even looking at the pass rate or recency score for that matter, because we've gathered enough data at this point to basically determine that it really doesn't make a difference. That torturing old data through backtesting is not what's going to improve our pass rate. It's actually the biggest lever that we can pull for improving our fast pass rate is choosing strategies that are going to incur lower broker fees, because that's really, broker fees are the house edge, like Adam said. So if we can reduce the house edge, then we're going to have a better result. And so, not just for hedging better results, but also for, passing more challenges, choosing a lower average volume, is the top priority. Um, yeah.
Tahir's asking, Adam, do your figures include overhedging since you have used actual numbers? Most of them were not overhedging because I only started overhedging like 2 months ago or whatever when we came out with it, 2.5 months ago. So yeah, I mean, my recovery rate would probably be even higher. If I did all overhedging, my recovery rate is probably over 100% for sure. No, all the data that we showed, guys, the data that we showed, all the simulations that were running on the HedgeBot testing tool is just regular hedging. So why can't HedgeBot turn off when the challenge is positive? Yeah, it's a good question, Steve. And again, this is something that we had the exact same thought. So you're thinking along the same lines we were. And it's a trade-off. It's a trade-off that we haven't really seen be work in our favor, to be honest, which is interesting. You wouldn't think so, but you know, we do we have these ideas as well, Steve, and we just test them and we let the data speak. What would be the best video or webpage to understand prop farming and hedging and overhedging? For like, you could look on our YouTube channel. If you just type in overhedging on our YouTube channel, you'll find stuff, or hedging on our YouTube channel, you'll find it.
If you get in touch with your coach, actually, they can point to resources we have available in the community. It's probably a knowledge-based article or a channel in Discord that you can also refer to.
Yeah, I'm sure there is something.
Just to be clear, some people are joining later, and they missed the first part or whatever. There's not a HedgeBot 2.0 release happening. So that we're not releasing a new version of the HedgeBot. Rather, we're recommending adjusting the settings on the current version of the HedgeBot 1.34 to turning off dynamic features, and then making sure you're choosing strategies that are based on low average volume, not necessarily pass rate or recency score.
Here's the overhedging. Just go to our knowledge base, which is kb.blueedgefinancial.com, and type in overhedging. And I found something here. Yeah, we tested 100,000 different challenges. Yeah, at this point. Ryan, I don't know which prop firms exactly have the lowest spreads and commissions. That'd be you may be able to see that actually on prop firm match. I think they might have that. You go here to prop firm. I think you can look at this, but you'll have to. Let's see. I wonder if they have that. They have you can see the lots, so you can see the commissions, but spread is like a more dynamic thing, right? Because it's always fluctuating. But you can look, either I wouldn't get too hung up on this because the broker's going to make their money if they have really low commissions and they're going to have higher spreads. If they have higher spreads, they're going to have really, you get what I'm saying?
And both spreads and commissions go up the more lots you trade. With spreads, it's kind of confusing because the spread is the same regardless of what lot size you use. It's still 7 or 10 or 15 or whatever. But the pip value or the dollar value per pip of that spread is more if you're using higher lots. So again, more lots equals more broker fees, spreads and commissions, and swaps even. And so the best thing you can do is choose low lot strategies.
Ron's asking, do you recommend doing 1-step challenges over 2-step challenges? 1-step challenges have higher EV. So take that for what you'd like and decide how you'd like to do it. But I personally am always going to max out my one-phase E8 Pro challenges.
EV calculator. Some people are asking for the EV calculator. It's actually not in the Discord, I realized. It might be in the knowledge base. If you type in expected value, it might be linked there. Not, I can give a copy. So here's the copy.
Marquise, you're asking, is there a true false option on HedgeBot to stop if the challenge is in profit and turn back on? There's not. Well, I mean, you can turn it off manually if you want to by just clicking the algo trading button, but you're just gambling at that point, in my opinion. I think you can take 3 or 4 E8 Pro challenges. We'll release 2.0 when we can confirm for a fact that those features are going to improve average recovery amount that we're talking about, that we think may. Yeah, Omar, good question. Recommended spread settings for filter on gold. I think you're good at 20 or 30 is, pretty good. We saw 20 or 30 is both better than 50. Um, how many of you guys you saw this and it made you believe more in your trading system that you're trading here with Blue Edge? Because it did that for me. I'm just curious if just write yes in the chat box if it did. Okay. Yeah, the spread is, I mean, the market is closed right now, Pierre. So you can't really look at the spread, right?
The spread fluctuates too. I mean, we're getting close to close and it'll be really high.
Oh, wait, sorry. Yeah, the market is not closed. For some reason I thought it was Saturday. I don't know why I thought it was Saturday. Uh,
I didn't sleep last night.
I, yeah, we stayed up kind of late. Uh, cool. All right. Yeah, just another reminder, guys, that Cancun promo, tomorrow's the last day to submit. So, uh, go ahead and submit propfarming.com. Here, I'll type it in here. Everyone, click on this link so you can at least look at it, see if it's something that you want to participate in. So I just put it in the chat box there. Everyone just go click on it. So you have it open in another window. So after this meeting, you can take a look at it. But yeah, there's only been like 12 people that submitted so far. So you have a pretty good chance of winning if you put any sort of effort into it. So yeah. Can I make test results available, please? Joe, how do you want to do that? Because we have like a million different spreadsheets.
Can you make the test results available, please? Yeah, we've got so many spreadsheets.
Which ones do you want?
Yeah, just the one we showed today, we could.
Is that what you want to hear? The ones, because it's quite yeah, we're testing like new ideas constantly. So we have like probably 100 different sheets or something. But we can share this one that we shared with you today for sure. Okay, is there more questions? We'll stay on for another minute or two. Is there any more questions? Joe, are you able to make a copy of that somehow, just like this sheet here?
Yeah. Yep, I just did. I just created it. I just copy and pasted that sheet into another one, so it's not overwhelming. And then here it is.
Tahir, it's in the chat. Make sure you click that. Yeah.
Um, did that work if you click on that, or do I need to like change the permissions? No, I think that should work. Anyone with links. Should it? Had to request access. Okay, yeah, that's what I was afraid of. What's this? The heck? Had to request access. Our data. Okay. Okay, that's fixed. Should work now. Same link should work, actually. Someone could confirm that. That'd be great. Awesome. All right, Adam. think we're
Hey,
good.
yeah, I think we're all set here, guys. Uh, thanks again and happy farming, everybody. Hopefully you all got better today. You should. And yeah, we'll talk to you guys in the chat and we'll keep you guys updated on Discord with the results that we're finding as well. Cool. Bye, everybody. Thanks.